Hello, my favorite traders. Today is Tuesday, August 23rd, and we are in day 7 of our micro E-mini S&P 500 futures small account challenge, where I trade the micro futures and I show you how I'm growing my small account. So today I want to ask a question before we jump into the trade review. Who's really in charge when you're trading? That's my question for today. Who's in charge when you're trading? Do you think it's your evolved brain that handles how you learn languages, whether you can tell the difference between teal and turquoise, or is it some other part of your brain? Well, I've been doing a lot of research and reading a couple of books that I will share with you later on. One of them is Tom Howgard's Best Loser Wins. It is a fantastic book on how to learn the habits of a winning trader. So, one of the things that I realized, I knew before, but basically, the person in charge of you while you are trading is the base part of yourself. It's not your evolved new brain. It is the ancient brain that was basically a response, an evolutionary response to help us survive. So the part of your brain that's in charge when you're trading, the hippocampus, it's your limbic system. And this resides basically down deep, like right around here near your brain stem. It processes fight or flight. It's responsible for the intense anger we feel, for the fear we feel of a loss, and it's responsible for aggression, anxiety, everything that we try not to be. That is the system that's in charge when we are trading. It's our base self. So when your amygdala perceives a threat, it activates the limbic system to prepare itself to handle that threat. And then your adrenal glands release hormones that raise your blood pressure, your heart rate, and they send blood throughout your entire body, basically to fight or flight. And when we were chased by saber-toothed tigers, that was really great. But in trading, it's not so good because what it does, it causes us to go on tilt. It causes us to engage in poor trading practices. And it also causes us to just lose overall. So we have to figure out a way to um, bring this system under control while we're trading. And I've been doing a lot of work in regards to that because for me, I I know I fear loss, and it stems from my childhood. Um, and losing money hurts. I mean, I first of all, I'm competitive. I don't like to lose. I like to win, and I'm also a like kind of a type A person. Um, but I'm an entrepreneur and I make things happen. So my response when something isn't working is to work harder and to figure it out and to try to force it to go my way. But that doesn't work in trading because in trading, you have to be able to define your risk, be okay with losing, and be able to move on. So in trading, it really is about being able to not let the losses bug you. And what I would do is I would have a great hit rate. Like my win rate would be around 65 to 70%, and I'm not joking at all when I say that. But then what would happen is I would have a couple losing days that would decimate all of my winnings because I could not handle to lose. Instead of me saying, okay, here's my predefined max loss for the day, should my trading not work out the way that I want it to, I'll just step away, I'll call it a day, and I'll start again tomorrow. I would go until where I would destroy all of my wins because I wanted that money back. And it's important to do a lot of self reflection when trading because trading is really you versus you. It's not you against the market. It's not the market stop hunting, your specific stop, but it's really you against you and how you handle the threat of losing money. In the book Best Loser Wins, Tom Howgard, and I'm going to do a video review on it. It's on my list to do. He says that the brain, and it's a scientific study, I can't remember where he found it exactly, but he says the brain processes a loss 250% more than a win. So a loss of $100 is processed 250% more than a win of $100. The same if you exponentially multiply it. So when you're trading, and for me, I created this YouTube channel to basically document my journey of becoming a consistently profitable trader, and I've seen where I've made mistakes. I have it out on my channel, days where I've basically just completely screwed up. And I hope that can help you when you're watching my videos to understand that we are not perfect, but by studying what winning traders do, I'm trying to emulate those that are winning. And I want to handle threats the way they handle threats. Not threats, but losses. Because in trading, if you have a win rate of about 40%, you're doing really well. Like you're doing really well. If you keep your losses small enough, let's say you lose one time and then you gain 1.5 times, well, now you have a profitable business model. So the key is to not let our prehistoric self, our base self, take over. So I want to show you the trade recap for today, but I just really wanted to talk about who's in charge when you're trading. I hope that helps you on your journey in becoming a better trader. So, all right, so today on the ES, we had kind of an up and down day. I basically I mapped out new supply and demand levels because everything had shifted so much over the past couple of days that we were up and then we were down. And I just kind of wanted to see for myself where the market was going to go. So if I take this down to the 1 hour time frame, you can see here that we just dropped down again from yesterday. So yesterday we ended up around 41, let's see, around 41.51, and then when we opened back up in the evening session, we went down again. So basically from when Asia opened at 1900, we took a nice dump down, all the way down. And this was the Globex low, 4118, which is shockingly close to last week's low of 4113.50. And then when London opened, London gave us a nice move up all the way up to 41.57. So I mapped out these supply and demand zones to kind of see what levels would be my levels of interest. And then as we moved on, we started progressively going down. So we had this failure test up here of 41.62 that just got completely knocked down to right above our key level of 41.44. And I will tell you how I traded the micros today. Today I was working on not taking a trade unless it matched my criteria, my setup. I will admit that sometimes I do get a little random in my trading where I'm not sticking to my levels. Um, I had no expectations for today, honestly. I just wanted to trade my process and trade it as good as I could. Um, so I noticed here that in pre-market, we were moving up a little, but we were hitting resistance at that 41.46 key level. And then we moved back down and then we moved back up. So I took a trade pretty much. I actually did a couple of trades in my account today, and I will share. I traded the e-minis as well, in addition to the micros. So I'll share the e-mini results in another video because those went really well. And I will admit that my lack of doing well on the small account challenge today was because I was focused trading the e-minis in my other account where I kind of let what was going on in the small account slide, but I will do better tomorrow. Um, so I entered in at 8:53 for my first trade and I went short. And then I basically closed that trade for a very tiny profit of about two um I closed it at 41 45.50. Um, and what you'll see here is you'll see an entry here. This is me buying two micros and then adding on to that position because I'm also practicing adding on to a winning position. So one of the things that has really kind of stuck with me is I don't want to define um, my trade and let's say I want to make 10 points, right? I want to see what the market gives me. And one of the things I want to do is I want to add on to a trade that is working in my favor. And I want to do it in a structured manner um, so as to not create a loss, but to increase my position so I can increase my winning size. So my goal for this week has really been to predefine my risk, to know where I'm wrong, to just get out without any emotions, and then stay in a trade that's working for me so I can get the max profit out of that trade. So that's been my plan. So this first trade that I took here gave me a net profit of about $57.50. So that worked out. And then I saw we were reversing, so I said, okay, I'm going to close it. Then the next trade here that I entered, I flipped long because I thought that this right here, and I'll draw it for you. I thought that this right here would actually, let me do it like this. I thought that this was shaping up. Oh, I hate this path thing. Come on. I thought that this was shaping up to be a bear flag where we were going to go up further. But instead, it turned out to be an actual reversal. So on this one, I had a couple small losses, but they basically wiped out my gains. So on this, I went up, I was at $57.50 profit. Then I had my losses that wiped out my profit. So now I was up $2.50 after this move here where I got stopped out. And then I took a short entry because I realized, okay, we are reversing. There's no way that we're going to go up higher. This is clearly a reversal with a pullback happening and then another reversal. So at this point, I went short, but I got stopped out because of this candle right here. So I'll just draw a little arrow so you can see that. So that candle right there stopped me out because you can see it's like a spike up and it was beyond my stop. And then we proceeded to go further down. So when you're entering a short trade, what I should have done was I placed my stop. I had my stop at 41.53.50, which was right above this candle here, 43.50. Yeah, it was right at the top of this candle was where my stop was placed, and that was incorrect. What I should have done was I should have placed my stop here 2 bars before this candle right here. And then that would have prevented me from getting stopped out. So when I went short, my entry was a good entry. It was 41.48.50. So my entry was right here when I saw, okay, we were going down. But what I should have done was I should have let this reversal play out and then gotten in here. So that's what caused me to get stopped out. And once you like start going through like your mistakes, you can really see like, okay, the stop was obvious. I should have put my stop here at 41.57. I mean, that's a really wide stop when my entry was 41. Yeah, my original entry was 41.55.25, and then my stop was too close, even though it was 3 points off. I should have put my stop back here at 41.58, and then that would have protected me from this right here. But what I could have done was, since I was a little too close on getting in, like to have a stop that far when you're getting in here is not a good move. What I should have done was I should have waited for the pullback to occur and then not taken the trades that caused a loss, right? But I entered, and the next time I entered in a really good spot where I was at 41.47. So I bought 2 micros here, and then I added on 2 more micros when I saw, okay, this looks like it's working in my favor, even though it's coming back a little bit upwards. And now I had a great trade. The problem with this trade was I did not I did not move my The problem with this trade was I did not move my take profit lower like I should have. So I did not capitalize on this huge move down. I exited around here. I exited around 41.35, as you can see here in the live replay, which was pretty silly on my part. I shouldn't have done that, but because I was so focused on my other trade, I messed up. So all in all, when it was done, I was up $71.25 in my account. Then I got back in and I got stopped out. I had a couple little losses. Then let's move on. I got back in. I kept getting stopped out. And if you see how the candles were shaping up, after about 10 o'clock, the momentum just pretty much the momentum and the volume died. Like you can see the volume here is around 15,000. Here it's around 8,000. It's pretty much cut in half at this point. And I should have taken that as my just get out of Dodge, just stop, because we just chopped around in this area. And let me flip to the other chart so you can see. Let me switch to the 5 minute so you can see how this looks. So after we had this really like first nice move down around 10 o'clock, we just chopped around, right? So from 10:15 to 11:10, it was just a chop fest. And not only that, you can see here how the volume is pretty much just cut in half. And then we end up taking another leg back down. And then we kind of like just drift back up. And then it's just this constant up and down chop fest on very, very low volume, which just caused me to take a lot of paper cuts in my account. And that's where my kind of my drifting trading went in, where I was like, okay, let me just get this back to, even if it's $1 profit, because I think at the end of the day, I was up $1.25 in this small account. And then with all the paper cuts that I ended up taking, I created a $236.25 loss in my small account. But the good thing is I stayed under my max loss for the day, and I traded my plan. And I know that I should not have taken these trades on super low volume in C session, which is what I did. So from about 10:30 all the way to 12 o'clock, I shouldn't have taken these trades at all. So my net loss on the small account is $236.25. And it's a loss, but I'm not worried about it at all, because if you watch the other video for today, you'll see how I made $1,300 in my other account, and I am way proud of that trading. So my goal for tomorrow is to be able to manage these accounts kind of at the same time, and just trade well. So I hope this recap helped, and we close out day 7 of the small account challenge. Thanks for watching, and if you like this video, please subscribe to my channel. I would appreciate it. Thank you.